Hi, I'm Arnav Singh.
Aniket Jain.
Abhinav Goyal.
Aayan, Siddiqui.
Soumya Kapoor.
Welcome to Penguin Investments. A deeper purpose drives us. In our view, a portfolio is more than just numbers. At its core, investing is an art that comes down to the people and building client-centric investment strategies that take into account their specific circumstances, goals, interests, and values. This is at the heart of what we do best. Nicole is a strong, driven individual who isn't afraid to break down barriers and is a family oriented person with a penchant for helping others. Her goals are twofold. First, to fund a $5,000 scholarship at UC Davis over 10 years, and second, to create generational wealth and contribute to college tuition. The nature and medium term horizon of the scholarship merits a risk averse approach, focusing on protecting capital while providing modest returns. For this, we recommend investing in US Treasury notes to maintain sufficient liquidity. On the other hand, creating generational wealth is a longer term goal. Therefore, higher risk can be taken on by investing in aggressive sectors. Since our client has multifaceted needs with a different risk profile and dimension to each, Penguin Investments follows a top down, value driven investment philosophy that accommodates our clients' diverse needs by incorporating a multi factor investing strategy consisting of macroeconomic, style, and client factors driven by quantitative and qualitative data to produce excess returns and reduce risk.
Economic growth is one of the significant drivers of market performance. Thus, we have adopted a top down investment approach. In the case of India, while the short term outlook looks sober due to a taper tantrum and valuation concerns, it is the fastest growing emerging market, and its GDP is projected to surpass Japan by 2050. With a strong economy and access to the world's largest companies, the US remains a premier investment destination despite a break in stimulus by the Federal Reserve. We have invested in the United States and Indian equities in line with our positions. Accumulating generational wealth and funding college tuition is a long term goal. Therefore, taking on higher risk by investing in the aggressive technology and financial services sector will help achieve this. On the other hand, the best suited defensive sectors for the risk averse scholarship goal are consumer staples, utilities, healthcare, and telecommunications. We now present a case study of one of our portfolio companies. Microsoft was particularly suited as it lies at the intersection of the world's most robust economy and the booming technology industry.
In quantitative analysis, we used financial ratios focusing on quality and size style factors. We calculated 15 ratio values and of 10 companies in each sector and ranked the data accordingly. We then compared this ranking with the 10 companies' historical risk adjusted returns to select 8 industry specific ratios across profitability, leverage, and cash flow. Using these ratios, we then examined every company and finally calculated a weighted average and their cumulative scores to develop a score out of 100% using a relative ranking system. Further, we performed our valuation analysis on the 65 selected companies. We used comparable company analysis rather than relying on DCF to assess a firm's valuation. To graphically interpret our results, we used a football field chart. We plotted 5 ranges produced by valuation ratios and came up with an estimated stock price for each company. Microsoft was a company that performed well in the relative ranking system and was also undervalued. The company showed excellent financial performance, and as you can see, it is not overvalued, unlike its peers in the technology sector.
We firmly believe in the words of Alfred Slager. I sort of suspect that ESG is a form of DNA or fingerprint of the organization, and in that sense might have more predictive value than financials. For qualitative analysis, we first looked at whether the financially stable organizations performed well on core ESG metrics such as GHG emissions and board independence. We then checked each Industries materiality criterion, followed by a quick controversy inspection to ensure that the companies we selected aren't involved in any scandals or conflicts that could cause future stock volatility. All of this was done with Nicole's priorities in mind, and particular emphasis was placed on companies that focused on our clients' issues such as racial equity, diversity, and women empowerment. In addition, we also placed emphasis on environmental friendly companies which aim at combating climate change and saving the penguins in Antarctica. Microsoft was chosen as our ideal company. It stood out as the best in every way, from pledging to be carbon neutral to incorporating women into core management and employment. Microsoft collaborates and creates initiatives such as Black Girls Code and TechSpark to assist and empower disabled, discriminated, and underdeveloped communities.
To reduce the risk of our portfolio, we have diversified investments across 6 sectors in 2 asset classes and used risk management ratios. Microsoft was a top performer with above average Sharpe, Sortino, and Trainer ratios, a low beta of 0.88, low value at risk, and a good alpha. In essence, there wasn't one factor that differentiated Microsoft from others. It wasn't the most profitable or undervalued, but instead it performed well in all the categories, leading it to be an ideal company in our portfolio. Our final portfolio comprises $75,000 in 14 stocks spanning 2 countries, India and the US, $20,000 in treasury notes, and $4,725 as cash reserves for future opportunities. A perfect balance has been struck between asset classes, industries, risk, and client values to realize all of Nicole's goals. Our Waddle's journey started earlier in May 2020 rather than September 2021, when we first decided to participate. From reading Investing for Dummies to becoming semi-finalist at Wharton Global High School Investment Competition, it has indeed been a remarkable journey that none of us will ever forget. Over the past 2 years, we have had a fair share of difficulties, including team members quitting due to academic pressure to receiving almost no support from our school. During these times, memes have been an integral part of keeping the team going and our morale high. In the end, while we gained immense knowledge, the most valuable element of the competition are the stronger friendships. When the COVID-19 pandemic isolated us, this competition brought all of us together as a team to learn something new and have fun in the process. Thank you so much.